Good day, guys. Welcome to the DMS trading channel. If you're new to this trading channel, you are welcome. And on this channel, I will be offering lessons for Forex trading. All right. So please remember to subscribe, like, and comment. And also remember to share because this channel will be giving you fundamental knowledge which you need to succeed in Forex, unlike any other channel out there. But this channel, trust me, it will be able to give you fundamental knowledge in what we call Forex. All right. So first of all, you need to understand what Forex trading is. Okay, what Forex trading is. Okay, for you to be able to involve yourself in the financial market of Forex trading, you must understand what Forex trading is. Because if you don't understand what Forex trading is, you are going to have a wrong mindset or understanding of what Forex is. And that mindset will cost you a lot of losing in the Forex market because you might be thinking of Forex trading as something which it is actually not what it is. So Forex trading comes from the word Forex, this word Forex here. Okay, so the word Forex actually means foreign exchange. So this word Forex, the word Forex means foreign exchange. Okay, so it just means foreign exchange where people are exchanging currencies or money. For instance, if you are traveling from USA and then you are going to China, you are not going to be able to use the currency which is the dollars in China when you are coming from USA. Therefore, you have to change your dollars into the type of money which is used in China, which is yen. So for you to do that, when you go to China, you have to buy the yen and you have to give the person the dollars. All right, you give the person the dollars, then they give you the yen, so that whilst you are in China, you will be able to do any transaction that you would want to do with that money. All right, so that is the basic idea of Forex trading. All right, so it is just a foreign exchange where you exchange currencies. Also, when you are buying something, let's say online, like dollar is the world currency. Dollar is the world's currency, and therefore, in most cases, we use dollar to buy things online. All right. So if you have your local currency, your bank has to convert for you your local currency into the international currency, which is actually the dollar. So for them to convert that, they have to charge you. So that conversion process is also foreign exchange. All right. So Forex exchange actually is done by multinational institutions like banks. Okay, the bigger institution, the one they call the hedge funds, it's actually big institutions that involve themselves in Forex trading, and the countries actually involve in Forex trading between countries. Let's say China wants to buy things in America, they have to ensure that when buying, they change their money into USA's currency, and also when USA wants to buy things in China, they have to change their dollars into the China's currency, which is the yen. Okay, Forex trading is of very, very importance because actually people involve themselves in Forex trading. People involve themselves in Forex trading, especially if your currency is strong, you can actually benefit from the strength of your currency over the other. All right, so because of that, people would rather keep dollars instead of other currencies because maybe the dollar in that particular period is more strong. So as they convert their money from the dollar into their local currency, you discover that their money is going to be more than what it was going to be. So forex trading is just the foreign exchange. So bigger institutions involve themselves in forex trading, and now individuals, which are known as retail traders, you and me individuals, we are called the retail traders. So retail traders as well involve themselves in forex trading. Okay, retail traders. Okay, so retail traders boast, okay, themselves, like we boast ourselves, oh, we are also forex traders, but in actual sense we are not forex traders. And this is why I said it is very, very important that you understand what you are involved in when you are doing forex trading, because you might think you are doing what other bigger institutions do when they trade currencies for each other, when in fact you are not doing what it is. So what retail traders do when they say they are doing forex trading, they are actually involved in what they call CFDs. Okay, so they're involved in what is known as CFDs. Okay, that's what they're actually involved in. So they're not doing forex trading, but they're just involved in what is known as CFDs. Now, what does it mean, CFDs? So this CFD that I've written here, actually it just means, let me just explain, it means contract for difference. So this means contract for difference. Okay, that's what this one means. It just means contract for difference, meaning that you and I, if we want to get involved in forex trading, we are going to get involved at a level known as CDF, which is contract for I don't know why it is taking long to respond when I edit, but we are involved in what is known as a contract for difference, which is CFDs. That's what we are involved in. Now, in contract for difference, it means that we are actually entering a contract with a broker, which is a trading platform. A broker is a trading platform. So you, a retail trader, and a broker, you are entering into a contract to be paid for the difference between the entering price and the exiting price. Okay, so each one of you should pay each other. Let's say you enter a trade. When you enter a trade, it means you have signed a contract to pay each other for the difference between the entry position and the exit position. Let's say you entered when the price is at this level here. You entered for a buy position. When you enter for a buy position in forex, you are betting that the price of that particular asset is going to increase or it is going to go up. Okay, so in forex, when we are doing what we call contract for difference, either we are betting for an increase in price, which is buy. So here we do what we call we are betting for increase in price. Okay, so in this case, if we are betting for increase in price, it means we are buying. Okay, that's what it is. It means we are actually buying. So that's what this means. So betting for increase in price, it means we are buying. So either we are doing this, or either we are doing this one, or we are betting for the decrease in price. So betting for decrease in price. Okay, which now if we are betting for decrease in price, this means that we are selling. Okay, that's what it means. So we are betting for increase in price, it means we are buying. And if we are betting for decrease in price, it means we are selling. All right, so that's what it means in forex trading. Okay, so let me just put a bulletin here so that it makes sense. So yeah, so that is what forex trading is here. So when you and me as retailers get involved in forex trading, we do two things: betting for increase in price, which means we are buying, or betting for decrease in price, which means we are selling. Now, when we place a buy, as I've explained, we are betting for the price to increase, meaning that we are entering into a contract between you or me and a broker to be paid when the price increases. Let's say I make an entry here at this point here, I make an entry at this point here, okay, and then price increases from this point and then goes to that point here. Okay, so the difference I'm going to be paid, the difference between the entry price here, the entry price here is, let me just indicate the entry price. So the entry price can be read from here. So the entry price, for instance, is this value here, 9218.9. And then let's say now I bet to say the price should go up to this point, which is 9344. So if price now increases from this point here up to that point after placing a buy, then the broker is going to pay me for the difference depending on how much I had to put there. Okay, so I will be paid by the broker. All right, now let's say I placed for a sale where I said price should actually reduce. So I entered maybe the market from this point here. I enter the market from this point, betting that the price will decrease. I see the price decreasing, then I bet that the price will continue decreasing from there. I put maybe my stop loss there up to that level. And then price doesn't decrease, instead the price does the opposite, goes up. Then the amount that I had put there will be paid to the broker. Okay, meaning that the broker is going to get a win in that particular order, because it means that the difference is actually negative. I betted for the price to decrease, which was a sale, but then the price went up, which means that it did not go in my own direction, and therefore I have to pay the broker for the difference between this position here where I entered from and then the position where I suggested I should exit if I am wrong here. So in forex trading, that's what we do. So there are two types of brokers. There are those brokers which are called market maker. Market makers, when you press a buy, they press a sell. When you press a sell, they press a buy. Meaning that when you lose, they make profit. When you win, they lose. All right? So these are the ones that do like this. And there are the most of them, I think, in the market. Then there is another type of broker, which I've forgotten them. When you place a bet, they help you to trade like bigger institution. So they take your trade and help it to place it on the real financial market. All right, so your trade is also transferred by your broker onto the real financial market, so that when you win, then they get a commission from your win, and also you win. When you lose, them they'll also get a commission, but when you lose yourself, it means that another person has actually won, because on the real financial market now you need to be paired. When you buy, your buy has to be paired with another one who is selling. When you sell, your sell has to be paired with another one who is buying. Okay, so that's what happens on the financial market, the real financial market. So as you join forex trading, this is what you need to understand it, to say, oh, to some extent forex trading is about betting on price increase or price reduction. Now take this kind of betting as a kind of betting which involves analysis. You don't just come in and bet to say price is going to increase, but you have to bet based on what price has done previously. All right, you just don't bet, you have to bet, okay, looking at what price has been doing in history. So like here, if you have to go this side here and the market is here, okay, so I have two options: to either bet that the price will continue going up, or to bet that the price will go down. Now what am I going to use for me to know whether the market is going to go up or the market is going to go down? I'm actually going to use what we call technical analysis combined with fundamentals. Okay, so technical analysis is where you look at the chart and understand the pattern in which markets move. So we have actually what we call three models of market structure. We have what we call the bullish market, which moves in this way like that. Okay, this is a bullish market, it moves in that way. Okay, then we have another one which we call a bearish market. So a bearish market moves in downwards like this. Okay, this is how a bearish market moves. Okay, then we have what we call a consolidation market or a sideways market, which moves like this. Okay, so now your job as a forex trader is to analyze the type of the market you are in at that moment. For instance, you look at this market here, you see that this market from this point here, okay, let me just decrease, from this point here to this point here, we have a bullish market where the market has been moving up and down, like it moved from here up to there, moved up from there, then it came down there, it moved. Okay, sorry, my network is not good, I'm sure, and this is why my cursor has disappeared. So let me see if my network is good so that I can do something about it. Okay, so I have been connected, so let me do like this. So I've been connected, so this market again moved like that. So if it moves like that, we expect that it is going to go down like that. So now you as a trader, your job is to know what the move, or to know the move the market is going to make in the next move. So you see again, it's like the network is weak. So in this view, I'm going to cut my video here. Please remember to subscribe to the channel, make a comment, like, so that in the next video I'm going to complete what I have left here. So far so good. When you follow me, you will know the way forex is supposed to be done. All right, So for now, bye and see you in the next video. Peace.